What is up, Bitcoin fam, and welcome back to the Bitcoin Bulletin. We're kicking things off with a massive move from BlackRock. You know them, the giants of traditional finance, and they are now planning to tokenize their ETFs. This is huge news building on the incredible success they've already seen with their Bitcoin ETF. Get ready for more digital asset innovation from the biggest players in the game. Next, prepare for some jaw-dropping predictions. We're talking about Bitcoin potentially hitting an absolutely insane $1 billion by 2038. And what does that mean for XRP? We're breaking down the incredible forecasts from Fidelity and other analysts, exploring how XRP could skyrocket alongside Bitcoin. This is the future of finance we're talking about. Then, we've got the latest on the institutional floodgates opening. Bitcoin is climbing above $115,000, fueled by massive inflows into U.S. spot Bitcoin ETFs. We're seeing optimism around regulatory clarity, and the numbers are staggering, with hundreds of millions pouring in. Plus, we'll look at what this means for altcoins and why Bitcoin is acting as the ultimate safe haven right now. And you are not going to believe this last one. A CPI surprise and a jobs shock just sent Bitcoin absolutely soaring to $115K, with ETFs pouring in like never before. We're breaking down exactly what happened and why it's a game changer for the entire market. You've got to stay tuned for all the details. Make sure you're subscribed, hit that notification bell, and smash that like button so you never miss an update. BlackRock's bold leap into tokenized ETFs. BlackRock, the undisputed titan of asset management, is doubling down on digital assets by planning to tokenize its exchange-traded funds. This strategic move comes hot on the heels of the phenomenal success experienced with their groundbreaking Bitcoin ETF. It signals a clear intention to integrate traditional finance with the burgeoning world of blockchain technology on a much larger scale. This expansion of BlackRock's digital asset offerings is more than just an incremental step. It's a fundamental shift in how they view and offer investment products. By exploring blockchain-based versions of their ETFs, BlackRock aims to convert a significant portion of its vast ETF portfolio into tokenized assets. This initiative is a direct response to the overwhelming investor demand and positive reception their Bitcoin ETF has garnered since its launch, proving the market's readiness for such innovations. The implications are massive. For the broader crypto market, this means a major traditional financial institution is actively building infrastructure that bridges the gap between legacy systems and decentralized finance. It validates the underlying technology and paves the way for increased institutional adoption and liquidity, making digital assets more accessible and familiar to a wider range of investors. This development has sent ripples of excitement through the crypto community. Analysts are pointing to this as a definitive sign that institutional players are not just dabbling in crypto, but are committed to building the future infrastructure. The success of BlackRock's Bitcoin ETF has clearly demonstrated the demand, and this tokenization effort is the logical next step in leveraging that momentum. But don't go anywhere, because the story is far from over. Next, we're diving into some absolutely wild predictions for Bitcoin's future and what it could mean for XRP. Bitcoin's billion-dollar dream and XRP's rocket ride. Could Bitcoin actually hit a mind-boggling $1 billion by the year 2038? That's the stunning prediction from Fidelity, and the crypto world is absolutely buzzing about the ripple effects this could have, especially for XRP. This isn't just fantasy. It's a look at how digital currencies are reshaping the investment landscape. Fidelity's audacious forecast suggests Bitcoin could become a dominant store of value, rivaling gold. If Bitcoin achieves this monumental status, it's expected to lift the entire crypto market, creating massive opportunities for other digital assets. The prevailing theory is that as Bitcoin captures a larger share of global investment, it could act as a rising tide that lifts all boats, including XRP. Whispers from forecasters like Digital Asset Investor suggest that if Bitcoin reaches that incredible $1 billion mark, XRP's price could skyrocket to an astonishing $25,000. The logic is straightforward. Bitcoin is poised to dominate, and if XRP maintains its current market share, its valuation could explode. This paints a picture of synchronized growth, where Bitcoin's ascent propels related assets higher. However, it's not all smooth sailing. Changelly estimates XRP could reach $2,406 by 2040, but skeptics point to regulatory hurdles and the need for XRP's utility in cross-border payments to gain widespread adoption. Unlike Bitcoin, often seen as digital gold, XRP's strength lies in its practical application for swift, cost-effective international transactions, making it a prime candidate for banking institutions. The crypto community is divided, with optimists highlighting the boundless potential and skeptics emphasizing the real-world challenges. Startups in Web3 and DeFi must navigate these complexities, leveraging XRP's promise while ensuring regulatory compliance. The interplay between Bitcoin's speculative surge and XRP's functional utility is crucial for understanding their intertwined destinies and navigating future investment strategies. But what's happening right now in the market? We've got Bitcoin surging past $115,000, and the ETFs are pouring in. Stick around to find out why. Bitcoin blasts past $115K on ETF frenzy and regulatory hope. Bitcoin is on an absolute tear, surging past $115,600 and leading a modest rebound in the broader crypto market. This impressive climb is fueled by a potent cocktail of renewed optimism around regulatory clarity and a massive wave of inflows into U.S. spot Bitcoin ETFs. Short-term profit-taking by whales couldn't even slow down this bullish momentum. On the regulatory front, SEC Chair Paul Atkins has signaled a more tailored approach with Project Crypto, criticizing past aggressive enforcement and suggesting a unified licensing system. This follows the Genius Act for stablecoin oversight and signals a potentially more favorable environment for institutional adoption. Galaxy Digital's significant XRP holdings increase and Anchorage Digital's strong inflows, especially for BlackRock's ETF, underscore this trend. The real driver, however, is the institutional money pouring into Bitcoin ETFs. Over $300 million in net inflows hit U.S. spot Bitcoin ETFs in just 4 days, with global Bitcoin ETPs attracting another $520 million. This stands in stark contrast to Ethereum ETFs, which saw outflows. Investors are clearly rotating back into Bitcoin, viewing it as a digital safe haven, evidenced by its rising dominance and a dip in the altcoin season index. Further bolstering Bitcoin's strength, exchange reserves have seen a significant decline, with roughly 820,000 BTC leaving exchanges in 6 months. Traders are also anticipating a 100% probability of a Fed rate cut, which could inject more liquidity into risk assets. While on-chain data shows mixed signals from large holders, long-term holders remain firmly in accumulation mode, and corporate treasuries like MicroStrategy continue to provide a solid underpinning of demand. Despite potential warning signs from the exchange whale ratio, the fundamental picture for Bitcoin looks incredibly strong. With constructive regulation on the horizon and consistent ETF inflows, analysts are predicting Bitcoin could extend its lead over altcoins heading into the final quarter of the year. But wait, there's more. A shock inflation report and jobs data just hit, and it sent Bitcoin into the stratosphere. You absolutely have to hear this next. CPI surprise and jobs shock ignite Bitcoin rally to $115K. Get ready for this one. A stunning CPI surprise and a shocker in the jobs report have sent Bitcoin prices catapulting past $115,000. This incredible surge, coupled with massive ETF inflows, is creating a whirlwind of excitement and opportunity in the crypto market. It's a testament to how sensitive and reactive Bitcoin can be to macroeconomic news. While the exact details of the CPI and jobs report are still being analyzed, the market's reaction was immediate and powerful. Investors interpreted these economic signals as highly favorable for Bitcoin, likely indicating a shift in monetary policy or economic conditions that boosts risk assets. The simultaneous surge in ETF inflows suggests that institutions are not only reacting to the news, but are also actively positioning themselves for further upside. This dramatic price action highlights the intricate relationship between traditional economic indicators and the cryptocurrency market. When key economic data points surprise the market, Bitcoin, as a leading digital asset, often leads the charge in price discovery. The $115K mark is a significant psychological and technical level, and breaking through it with such conviction signals strong bullish sentiment. The community reaction has been electric, with traders and analysts scrambling to understand the full implications. Many see this as validation of Bitcoin's potential as an inflation hedge and a growth asset, especially when combined with increasing institutional adoption via ETFs. Discussions are heating up about potential price targets and the sustainability of this rally. And that's a wrap on today's top stories. But before you go, a lightning round recap of everything you need to know. And that's a wrap on today's Bitcoin Bulletin. We saw BlackRock making moves to tokenize ETFs. We dove into mind-blowing predictions of Bitcoin hitting $1 billion and XRP soaring. Witnessed Bitcoin blast past $115,000 on massive ETF inflows and regulatory optimism, and saw a CPI and jobs shock send BTC flying even higher. Don't miss out on the next big thing. Hit that subscribe button, ring the notification bell, leave us a comment with your thoughts, and follow us on all social media platforms for real-time updates. We'll see you next time.